Hey traders and investors, it's Serge Berger here. With all the news of different M&A activity happening in the pharmaceutical space over the past couple of weeks, I thought it would be interesting to take a look at the Pharma index. I'm going to go with the DRG, which is the pharmaceutical index that a lot of people follow. I think it's got about 25 or so components. And basically, you can see just from a multi-year perspective, we're going absolutely vertical here through the sort of multi-year, longer-term lens. But if we zoom in a little bit closer, you can see that there still is room to go higher here. So there might be a final overshooting here, of another 5, 10%. I don't no idea. But my point is, I don't think we're at a sort of major topping pattern yet. Much more interesting than even the chart of the DRG is the ratio of the DRG versus the S&P 500. So if we just take the DRG and divide it by the S&P 500, we get a chart that looks something like this. Okay, and this is also a longer term chart here going back to not 2009. What strikes me the most though is if we draw a very simple horizontal from the September 2010 highs, we see that we're getting at a pretty critical spot here over the past couple of weeks or so. What's more important even is that we're sort of basing up here or coiling up. The ratio is below the multi-year resistance line. So if and when we get a move past this resistance line in the ratio chart of the DRG versus the S&P 500, I think we have a very good chance of going higher, which means that from a relative perspective, not an absolute, but a relative perspective, pharmaceutical would then certainly continue to outperform. And I think actually already this pattern is quite interesting because it basically gives us, for the lack of a better term, a bull flag pattern. Okay. Speaking of bull flags, if we just go back to the chart of the DRG itself, not that difficult to imagine that we have a bull flag also in play here, which then should also not be very surprising if we look at some of the individual components of the DRG, like, for example, FRX. FRX, which is Forest Labs, you can see the same pattern developing here. Very bullish until it's bearish. You can look at something like HSP, which is Hospira. Here also you see a very defined line of resistance that if we can get past, the stock should be able to move higher nicely. Moving on to MYL, which is Millen Labs. Look at this, same exact story here. And I can go on and on and on depending how you draw this. You see there's a very clear defined resistance. There's a lot of charts like that. So my point is, even Merck. Let's look at Merck quickly. My point is that the pharmaceutical stock, as much as they've run over the years, they certainly, from an absolute perspective, still look like they can go higher, which is what these individual charts here show that I just flipped through. But more importantly, even in this late cyclical bull market, is to understand that from a relative perspective, these stocks might be able to offer us some relative outperformance. So I hope this makes sense at all. If you've got any questions, you can hit me up on Twitter, or you can sign up to the trade alerts on thesteadytrader.com. My Twitter handle is SteadyTrader. Take care.